Okay, let's talk about the biggest ticking time bomb in the world of cryptocurrencies. About a company that prints money out of thin air. About a scheme that would make Bernie Madoff nervously smoke on the sidelines. I'm talking about Tether. And if you've never heard of it, buckle up, because this story is crazier than any financial thriller. Imagine you want to trade crypto. Bitcoin swings up and down by about 10% a day. Ethereum does the same. You buy Bitcoin, it goes up, and you want to lock in profits. But you don't want to cash out into dollars. It's slow, expensive, and triggers taxes. So what do? You move into a stablecoin. A stablecoin is a cryptocurrency pegged to the US dollar. One token equals $1. Always. Stable. That's where the name comes from. The idea is simple. You give the company $1 and it issues one token. Want your dollar back? You return the token and get the cash. The company keeps all the dollars in reserve 1-to-1. Simple, transparent, reliable. Tether, or USDT, is the largest stablecoin in the world. As of January 2026, Tether's market capitalization is about $187 billion. There are nearly 187 billion tokens in circulation. That's larger than the GDP of most countries in the world. Bigger than the market capitalization of Goldman Sachs, Morgan Stanley, and many other financial giants combined. This is a systemically important financial institution. And this is where things get interesting. Remember how I said the company is supposed to hold dollars in reserve, 1-to-1? Well, with Tether, it wasn't that simple. And the story of their honesty is a detective novel all by itself. In 2019, the New York Attorney General launched an investigation and uncovered something interesting. In 2021, Tether and its sister company Bitfinex paid $18.5 million to settle a nearly 2-year investigation by the New York Attorney General Gaius office into whether they had concealed the loss of almost $1 billion of client funds. Part of that money had been transferred to a related company, the crypto exchange Bitfinex, to cover its losses. Yes, you heard that right. Money that was supposed to back your tokens quietly went to plug holes in another business, without your knowledge, without any announcement. And then there was another fine. The CFTC fined Tether $41 million for false statements about its US dollar reserves. For a company of this size, that's like a parking ticket. And they kept operating as if nothing had happened. Let's meet the main characters in this story, because the cast here is worthy of an HBO series. Tether and its affiliated crypto exchange Bitfinex are, in practice, the same company under different names. Shared management, shared owners, shared history. In January 2025, Tether International SA to CV successfully relocated from the British Virgin Islands to El Salvador. You know, El Salvador, the country that made Bitcoin legal tender. A very convenient jurisdiction for a crypto company that doesn't want too much scrutiny. The company's CEO is Paolo Arduino. He actively defends the company on Twitter and gives interviews, but the details of operations remain vague. These are the people you trust with your money when you buy USDT. Feeling safe? Okay, you might say, I don't hold Tether, so I don't care. Wrong. You very much should care, and here's why. Tether is the largest cryptocurrency by trading volume, holding about 70% of the stablecoin market. In 2019, it overtook Bitcoin to become the most traded cryptocurrency in the world. Tether is the bloodstream of the crypto market. Most Bitcoin trading doesn't happen against dollars. It happens against USDT. On many exchanges, especially in Asia, it's the primary trading pair. When someone wants to buy Bitcoin, they usually buy Tether first, then exchange it for BTC. When they want to sell, they do the reverse. If Tether collapses, this entire system freezes, instantly. Exchanges built on USDT grind to a halt. Liquidity evaporates. Prices crash. Remember the collapse of FTX in 2022? Bitcoin dropped about 20% in a matter of days, and FTX was much smaller than Tether. If Tether goes down, it won't just be another crash. It will be crypto Armageddon. So, we have a company with a murky history that has already been caught lying about its reserves, but that was in the past. What's happening now, in 2025 and 2026? Here's what is truly shocking about Tether. They are minting new tokens at an industrial scale, and the pace is absolutely insane. In 2020, there were about 4 billion USDT in circulation. By 2025, the amount of USDT in circulation across multiple blockchains had exceeded $140 billion. And now, as of January 2026, it's already around 187 billion. That's almost 50 times growth in 5 years. 50 times. In the third quarter of 2025 alone, more than 17 billion new USDT were issued. That was one of the strongest quarters in the company's history, pushing total circulation above $174 billion. In theory, this means people handed Tether 187 billion real dollars and received tokens in return. 187 billion actual dollars. The question is, where did this money come from And who are these people? As of early 2025, Tether was still providing only attestations, quarterly reports, not a full audit. This is a critical point. Tether publishes attestations from the accounting firm BDO. But an attestation is not an audit. It's basically a piece of paper that says, we looked at their numbers on a specific date, and the numbers look like numbers. Despite increased disclosure, Tether continues to face criticism for the lack of a full audit and for its opaque governance structure. None of the big four auditing firms, Deloitte, PwC, EY, or KPMG, has agreed to conduct a full audit of Tether. The company claims it is in talks with one of the big four about a comprehensive reserve audit, but those talks have been going on for years with no result. Think about that. A company with more than $180 billion in assets cannot find a reputable auditor. Why? What exactly would they find? Now here's where it gets even more interesting. For the first 3 quarters of 2025, net profit exceeded $10 billion. That confirms Tether's status as one of the most profitable and financially resilient private businesses in the world. $10 billion in profit in 9 months. A company with a few dozen employees, no public headquarters, registered in El Salvador. About $13 billion in net profit in 2024. Roughly $4.9 billion in profit in the second quarter of 2025 alone, and about $5.7 billion for the first half of the year. Where does that kind of money come from? According to Tether, from investing reserves in U.S. Treasury securities. Tether's total exposure to U.S. Treasuries, both direct and indirect, has reached a record high of roughly $135 billion. That makes Tether one of the largest holders of U.S. government debt in the world. By this measure, it has surpassed South Korea and now ranks around 17th globally among holders of U.S. Treasuries. At current interest rates, that's roughly 5% per year. On $135 billion, that's about $7 billion a year. On paper, the math checks out. But again, where is the independent verification? Where is the full audit? If everything is so perfect, why not do a proper audit and silence critics once and for all? As of September 30th, 2025, reserves backing Tether tokens in circulation totaled about $181.2 billion. The company's liabilities were about $174.4 billion, almost all of which were related to issued digital tokens. The value of reserve assets exceeded liabilities by roughly $6.8 billion. That sounds solid. Nearly $7 billion in excess reserves as a buffer. But let's look at what those reserves are actually made of. Tether S reserves in gold and Bitcoin amounted to about $12.9 billion and $9.9 billion respectively, representing roughly 13% of total reserves. That reflects what the company calls a diversified, forward-looking reserve strategy. In other words, about 13% of reserves are volatile assets, Bitcoin and gold. Bitcoin can drop 50% in a single month. Gold is more stable, but it is still not the same as dollars sitting in a bank account. According to third quarter 2025 data, Tether held about $181 billion in reserves against $174 billion in liabilities, including roughly $135 billion in U.S. Treasuries and about $6.8 billion in excess capital. However, around 12.5% of reserves consisted of volatile assets such as Bitcoin, gold, and secured loans. Standard & Poor's downgraded USDT to its lowest stability rating, citing transparency concerns. Standard & Poor's is one of the largest credit rating agencies in the world. Giving Tether the weakest possible stability score is not nothing. Tether may no longer be able to avoid serious scrutiny. The Wall Street Journal reported that federal prosecutors in Manhattan are investigating whether Tether violated anti-money laundering and sanctions laws by being used by global criminal networks for drug trafficking, terrorism financing, and hacking. These are not conspiracy theories. This is a U.S. Department of Justice investigation. The same people who put the founder of FTX in prison. Tether has acknowledged that it has complied with information requests from the Department of Justice, the IRS, and the Secret Service. The company says it actively cooperates with law enforcement. And to be fair, between 2023 and 2025, Tether froze more than $3 billion across over 7,000 addresses, more than any other stablecoin issuer. But the question remains, if everything is so clean, why do the investigations continue? Why is there still no full audit? And why does Standard & Poor's give it the weakest possible rating? All right, we've established that Tether is, at the very least, a highly suspicious operation with astonishing profits. But it does work, doesn't it? The tokens trade, people use them, everything keeps spinning. Maybe it will just keep working. Let's talk about what has changed and what could happen next. Here is what actually happened over the past year. The European Union adopted the MiCA regulation, the Markets in Crypto Assets regulation, and for Tether, this became a serious problem. As of March 31st, 2025, issuers of electronic money tokens that have not received authorization under MyCA are no longer allowed to offer their tokens to the public or seek admission to trading in the European Economic Area. Despite the fact that USDT is the most traded stablecoin in the world, Tether chose not to pursue MiCA compliance. Without a licensed entity authorized to issue USDT in the EU, MyCA regulated exchanges have no choice but to stop offering it. What does this mean in practice? Coinbase Europe was one of the first to delist USDT in December 2024. Crypto.com informed EU clients that it would stop offering USDT by January 31st, 2025. Binance announced in March 2025 that it would delist 9 stablecoins, including USDT, for users in the EEA. Paolo Arduino, Tether's CEO, defended the decision not to comply, stating that the regulation is dangerous for stablecoins. The main point of disagreement is the requirement to hold 60% of stablecoin reserves in European banks. Arduino also criticized the EU's direction regarding the digital euro, saying that the European Central Bank is more interested in promoting a digital euro as a way to control people. But the fact remains, Tether, the issuer of USDT, is still absent from the authorized list because it does not meet MyCA requirements. As a result, it has been delisted from several EU-based exchanges, including Coinbase and Crypto.com. Europe is a massive market, and Tether has lost it. In the United States, the situation is not much better. Regulatory pressure is increasing. MyCA compliance in the EU creates delisting risks, and the American Genius Act could introduce stricter reserve requirements. The recently adopted Genius Act in the US confirms that stablecoin issuers operating in the country must comply with federal rules designed to prevent money laundering and criminal finance. After the Genius Act was signed in July 2025, Tether announced plans to expand operations in the United States. In September 2025, Tether launched USAT, a US-based stablecoin, appointing Bo Hines as CEO of the company's American division. An interesting move. Tether is creating a separate U.S. structure, possibly to shield its core business from American regulators. On January 11, 2026, Tether froze approximately $182 million in USDT across 5 wallets on the Tron blockchain. On January 11, 2026, Tether froze approximately $182 million in USDT across 5 wallets on the Tron blockchain. This was one of the largest single-day freezes in Tether's history. It happened against the backdrop of Venezuela's heavy reliance on USDT for oil trade, with roughly 80% of PDVSA revenues now conducted in stablecoins to bypass sanctions. On the one hand, this shows that Tether cooperates with authorities. On the other hand, it reveals something even more important. Tether retains special administrative keys in the smart contracts of the USDT it issues, allowing the company to freeze tokens at the issuer level. Unlike Bitcoin, which no one can freeze, USDT can be blocked at any moment. Your money is not entirely your money. Let's model a scenario, purely hypothetical. Day 1. Rumors emerge that Tether cannot fulfill a large redemption request. The price of USDT, which should be $1, drops to 95 cents. It doesn't sound dramatic, but panic begins. Day 2. Everyone tries to exit at the same time. Exchanges halt USDT withdrawals. The price falls to 80 cents, 70 cents, 50 cents. People who thought they were holding stable assets lose half their value. Day 3. Crypto exchanges that rely primarily on USDT suspend trading. Liquidity evaporates. Bitcoin, which was trading against USDT, becomes impossible to sell because there are no buyers. According to Chainalysis, stablecoins accounted for roughly 84% of illicit activity tracked in the crypto sector by the end of 2025. If regulators decide they've had enough and begin mass wallet freezes, the system could unravel very quickly. A fair question follows. If everything is this bad, why is Tether still worth $1? There are several reasons. First, a self-fulfilling prophecy. As long as everyone believes USDT is worth $1, it is worth $1. This works until it doesn't. Second, no one wants to be the one who collapses the system. Large players understand the risks, but they also understand the consequences. If you hold billions in Bitcoin and know that a Tether collapse would wipe out your portfolio, you are not interested in triggering that collapse. Third, Tether has become too important, too big to fail. Fourth, 99% of Tether's treasury holdings are custodied through Cantor Fitzgerald, a major financial firm that provides a certain level of institutional legitimacy. All right, enough doom. Let's get practical. If you hold USDT, ask yourself whether you really need to. USDC from Circle complies with MyCA requirements. It is available on all major exchanges and is designed with transparency in mind. If you trade crypto, understand the risks. An exchange that relies heavily on USDT carries counterparty risk. If Tether collapses, your funds on that exchange may be frozen. If you hold crypto long term, keep it in your own wallet, not on an exchange. Not your keys, not your coins. And most importantly, Do not keep more in crypto than you are prepared to lose. It sounds like a cliche, but it is true. The market can go to zero in a week. We've seen it before. You know what amazes me the most about the Tether story? Not the audacity, not the scale, but how few people pay attention. $187 billion, a systemically important financial institution, without a full audit, with a weak stability rating from S&P, under investigation by the Department of Justice, pushed out of the European market, and millions of people trust them with their money every single day. Why? Because it's convenient, because it's worked so far, because everyone uses it. It's the same mindset that led to the 2008 crisis. Real estate prices always go up. Banks know what they're doing. The system is too big to fail. And then the system collapses, and everyone is surprised. I don't know when Tether will collapse. Maybe in a month, maybe in 5 years. Maybe they'll somehow get out of it, finally pass a full audit, obtain all the licenses, become transparent. But I know one thing. When something looks like a duck, swims like a duck, and quacks like a duck, it's probably a duck. And when something looks like a financial pyramid, behaves like a financial pyramid, and hides from oversight like a financial pyramid, well, you get the idea. Protect your money, because Tether certainly doesn't.